Hello everyone. The big news in finance last week is that the Netflix walks away from buying Warner Brothers. Instead, they Paramount bought it. Interestingly, the Netflix stock increased over 10% after the news. But I'm not surprised at all because before the deal, I already predicted how such an acquisition will hurt the company's value. However, even without the acquisition, I still found that Netflix stock is overvalued right now. So in this video, I will explain how to analyze Netflix stock. Also, I will explain how acquisition will affect a company's value, even if Netflix didn't buy Warner Brothers, because the companies I will invest in the future can have acquisition. Even if you do not buy stocks, your job security or benefit will still be affected if one day the company you work for acquire another company. But with so many people talking about stocks, with so many analysts and researchers working on Netflix, why do you listen to my analysis or watch my video? I have been in finance for years, and one thing I have noticed in this industry is most people would like to use terminologies that only people in this industry can understand. And I don't like it that. I want to use a daily language so that everyone can understand finance and investment. Just like Paul said in the Bible, I had to feed you with milk, not with solid food, because you weren't ready for anything stronger. Of course, I'm not arrogant enough to compare myself to Paul, but that is also my strategies when I explain finance and accounting to people. Netflix started as a DVD rental company in 1997. The company should have disappeared if they didn't change the business model. However, the company successfully transformed from a DVD rental company to a online streaming services, and it also started to make its own shows and make a hit. That is why I always said it's important to know the business model of a company. The business model is about how a company generates revenues, attract customers, maintain growth for long term, how it reinvestment its capital and make the return from that. The first time I learned about Netflix is was in 2016 when I started in the US college. And in 2018, in one of the finance class, the class has a project in which a group of students will analyze one companies. And for most people who have worked in a group, you know what the group is usually made of, right? You usually have one or two people. They know what they are doing and they are willing to contribute to the group. You also have one or two people, maybe they always show up, but they never do anything. And you will have some people, they are really willing to contribute, but they really don't know what to do. So what I have been doing in the group project is I will take the hardest job and I will delegate job to others. So first I will tell them the Netflix business model is to grow its subscribers revenues. The more people subscribe to the company, the more revenues and the income they will have. And the major reinvestment will be the money spent on the research and the development on the technology, and also the money the company will spend on making the new shows. I just let one of my group members to forecast the future Netflix subscribers. And this is the data he gave me. He used how many subscribers Netflix had in 2017, and they calculate the average annual growth rate on subscribers for Netflix for the past 5 to 10 years, and that is about 28%. So he used the 2017 numbers multiplied by 1 plus 28% for each year for the next 10 years. And when I saw the data, it just cracked me up. I said, do you know how many population in the world? He got confused and said, well, I'm not sure. I said, the world population is about 8 billion. Well, you estimate 1.3 billion subscribers for Netflix in the next 10 years. He still didn't see the problem. I said, so you are implying that there will be about 15% of the world population to subscribe to Netflix. But how about other streaming services? How about those TV stations in other countries? This person has already worked for JP Morgan as analyst right now, but that's a sad story. But I found that this can be a good starting point for today's valuation. If I know how many people will subscribe to streaming services globally in the future. And then if I can estimate how many percent of market share for Netflix, then I can estimate the Netflix growth and value in the future, right? So let's do it. So here you can see that these are major streaming services by brand. So here we have the Netflix with the hedges 31% market share. Following about that, there are Amazon Prime, Disney. The Max is Warner Brothers, HBO and Discovery, and YouTube. If you have been following on streaming services, you know that the Amazon and YouTube did not start until the recent 5 to 10 years, but they already have quite a few growth. So the next is what I do. First, I will get information from consulting agency or analysts about how many people will subscribe to streaming services globally in next 10 years. As you can see that the estimate is about 2 million, it's about 2 billion. But regardless of what kind of data or news we see, it's always important to check by ourselves with common sense. So what I do is I use this number, this 2 billion, divided by how many people we expect to have internet access in the next 10 years. People who are from US or North America, they probably don't know that many people in this world still do not have access to the internet or very low speed internet. I recall that once I traveled in a small town in Turkey because I want to learn about the history. Their internet is only fast enough for me to read on web page, and I can only watch streaming videos when not many people are using it. So I use this number divided by how many people will have internet access in the next 10 years, and the result is about 30%. So this number makes sense. And then I would say right now, the Netflix has about 19% market share for all the streaming services subscribers globally. And I will see how much the company will worth if they can increase that to 50, 60, 70, or 80%. And I can use the distribution to know how much I will decide to buy the Netflix. But before we jump to that, I would like to talk about acquisition. This is the price changes for Warner Brothers. Warner Brothers is one of the most well-known film companies with some best-known shows like Superman. However, before 2022, the company is owned by AT&T, and in 2022, the AT&T advised by McKinsey, JP Morgan, Goldman Sachs for millions of dollars to merge with Discovery. And you can tell that the stocks slumped ever since that. Some people who see this chart, they may say, you see, it's always good to buy stock and hold it for the long term, right? Because even if they decrease, they finally came back. But were it not for that the Netflix and Paramount decided to buy the company in 2025, the stock has been decreased for over 50% ever since the acquisition, ever since they merged. And also, if you buy that, say 10 years ago, and if you hold to right now, you will keep seeing your stock has around 50% decrease in your portfolio. So it is always important to know what we are buying and what the company is doing, rather than just blindly buy a stock and hold forever. But such a decline in value in acquisition is not rare at all. Based on the data from McKinsey and the Harvard Business School, over 50 to 70% merger and acquisition end up losing money. And we think about why is that? The reason is merger acquisition is a shortcut for companies, CEO, and management to make a company from a money losing or declining company to turn around. The managers and the CEO, you need to do several hard jobs. You need to try to improve the profitability, cut the cost, and maybe change the business model. This is probably all work. But acquisition is seemingly a shortcut. You just spend money and you go to the investment bank and they will find a target for that. An analogy I will give is that running a company internally is like having a relationship, go to the church together and get married, while doing merger and acquisition is like buying sex or prostitute. You feel like buying sex or prostitute is easy, but you fail to recognize the long-term detrimental in your life. Buying sex and prosecute will hurt your ability to maintain and develop intimacy. And the investment bankers facilitate that. Whenever the company goes to the investment bank and asks them, we have billions of dollars, can you find me a target? And investment bankers will always for them. If the merger and acquisition is like prosecute, the investment bankers are pink. But as an investor or a person working in the company, it is important to analyze the effects of merger and acquisition when the company you have or you work for unfortunately did that. This is a free cash flow I did for the Warner Brothers. As you can tell that the company has already have a negative 2 growth rate last year, which means that in 2025, the company has already earned 2% less than 2024. So what I do is if the Netflix acquire the Warner Brothers and with the help of Netflix platform, maybe the Warner Brothers can gradually increase its revenues to positive and then increase to the same growth rate as Netflix in year five. Another thing is that you can see that the operating margin, which means for each dollar of sale, how much money the company has only about 1% per margin. But of course, that number is so low because the accountant they try to record many one-time expense to make the company's earning looks lower so that they can pay fewer tax. But even after I did several adjustments, the company only can earn about 10% operating margin, which is kind of low compared to most of the streaming service company because streaming service company you have much less fixed cost. And even with all this adjustment, the value per share I estimate for Warner Brothers is about $12, which is more than half fewer than how much the Paramount end up paying. And while reading through the Warner Brothers financial report, I also found it has several things I need to check. You can see that here I called out something called pension deficit. Most people working in the US company today has 401k. How it works is that you choose a certain amount of your salary to contribute to the 401k and the company will match with you. But it's not like that in the old time. During the old time, several companies they have something called defined benefit plan, in which the employee does not need to pay anything during their work. Instead, the companies promise to pay you a certain retirement once you're retired. As stock investors, we get paid after everyone else. The more the company pays for other people or other parties, the less we will get. So it is always essential to see whether your companies have a large pension obligation and whether they can afford that. But in the Warner Brothers financial report, it says that it is unable to estimate how much the pension obligation, which already may give you some signal that this is not going to be a good deal. But since Netflix did not end up buying the company, so I don't need to worry about that. But if you are interested about how to value the pension obligation, you can check the link in the description on my YouTube. I value the General Electric pension fund in the future. But an acquisition can will have much more lasting effect on a company. When a company have acquisition, they have several methods to get funds. One way is to use the cash on their hands, or they can issue new shares, or they can borrow money. When the company borrow money, taking debts to buy another companies, that is not whether such a deal will make or lose money, but whether the debt will increase the riskiness of the company overall. As you can see here, from the most recent Netflix annual report, that it will borrow $59 billion if they finally decide to buy the Warner Brothers. And here, those are the ratios I calculate to measure the company's risk. The cost of debt means the risk, how much money the company to pay to borrow money. As you can see, without taking the debt to buy Warner Brothers, the cost of debt for Netflix is about 3.56%. However, if they bought such a large amount of money, the cost of debt will increase to over 5%. And of course, those rates are after tax because when you borrow money, you will have tax benefit. But you can see how acquisitions can not only affect the company's product lines or human resources, but the overall riskiness of a company. And also, if the Netflix did the acquisition, I will also add the additional interest expense they need to pay for those debt. After I did all of them, I read through the Netflix annual report to see are there anything else will affect the company's value. Once I noticed is that the Netflix paid about 600 millions penalty to Brazilian government because Brazil they has a law that if you are a foreign company and if you make revenues in Brazil and you send back to your home country, you need to pay 10% of that. And fail to pay that will incur a penalty. And for some people see that they may say, oh, that's Brazil, right? They are developing countries, so they have a bad government. But don't judge like that first. Many people in the US like to say charge a large corporation because they make tons of money. But guess what? When you charge those corporations too high, once they will do, they will leave the money overseas. In fact, Apple has billions of dollars left in countries like India or China. Because the moment they take their money back to the US, they need to pay the 25% corporate tax, even if they have already paid the local government. So always be careful about what you wish for. But when it comes to law and regulation or penalty, what usually happen is always come back and forth, right? You will always see some government like EU, they want to have penalties. Will have antitrust for Microsoft or Google. They will have penalty, and sometimes the company pays penalty, and sometimes they can win their legal team and they do not pay the penalty. So it's come back and forth. So what I do is I see how many percent of next Netflix revenues will come from Brazil, and I use that percent multiply the Netflix future value, and I use that amount multiplied by the percentage of penalty. And sometimes they will pay, sometimes they will not pay. And after 5 or 6 years, I expect that Netflix will find a way to completely avoid that. And this is investment because investment is about predicting the future. No one knows what is happening in the future, but what we can do is always to do our best estimation. And after I did all of them, I got the value per share for Netflix with or without acquisition from 20% to 80% market share. But when you see this data, did you find that for the scenario in which the Netflix does not have a acquisition, I have the scenario ranges 20% to 80%. But if the Netflix acquired the Warner Brothers, I only have the 40% to 80%. You may wonder why. Remember here, we know that the Netflix around 31% market share, while the Warner Brothers have 13%. So they have over 40% market share in total. It is very unlikely that they will decrease 10 or 20% market share from that. So it is always important to do a common sense check when you do the valuation. Another thing is Netflix used to be commercial free, but in the most recent years, Netflix just rolled out some cheaper subscription in which you can pay only $7.99. But you need to 10 to 20 seconds commercial. So how to estimate the revenue and the profit for that? As a fundamental investor, I will see how Netflix charge its commercials. And I found that the Netflix charged by thousands of views per second. But I don't know the Netflix business partners. But from a recent financial disclosure, Netflix said that they made $1.5 billion from commercial and they expect to grow 100% in 2026. But the thing is, for companies management, they will always give us good news and they may exaggerate the numbers, right? So what I do is like I see how much the advertisement commercial industry will grow in the next 5 to 10 years. And I let the most recent 100% growth rate gradually decrease to the industry average and then gradually decrease to the GDP growth rate. So the logic behind that is even it is very good company, it cannot grow faster than the industry and the GDP forever. And after I did all of them, this is a value per share estimate for Netflix. From 20% to 80% market share, the value can be ranges from $25 to $59. And the median value per share for Netflix is about $41.34. And this is the price I will buy the stocks. With the stock trading at over $90, I'm very patient and I just don't feel rushed to buy. And this is my Netflix stock valuation. Feel free to ask questions or post a comment under my YouTube, or you can read my Substack. Thank you.